The broadcast is now starting. All attendees are in listen-only mode.
All right, everyone. Welcome to today's webinar. My name is Jerry D'Ambrosio. Hope you guys are doing well. There we go. Peter beating me to the punch. Peter says the audio is good, so I do want to do a quick sound check just to make sure everybody can hear me and see my screen. Hello, Gil. How you doing? There we go. Babette says all good. Fantastic. All right, guys. Well, I want to welcome everybody to just a little sneak peek of our all-new precision swing trading course. And I can still say all new because this will only be the second time that we offer this course. We did so a few months back. We actually just finished our last module, Module 6, just a few weeks ago. And we got so much tremendous feedback from a lot of our attendees of just on how much they appreciated the course. It was something that they were really, really looking for us to do and looking for us to offer. This is a course that I've wanted to put together now for a little over a year. Kind of got sidetracked at the end of last year and really focused the beginning of this year on creating a technical analysis chart pattern type of a course. And this is what this is all about. Okay. So I want to take you guys through just again a little sneak peek of what this course is all about. And what I'm going to start with first is just a breakdown of the content of the course. Essentially, it's a 6-module course, a 6-week course. Steve Chappell, David Paul, and I will be your instructors for this course. Like I said, we delivered this course, about a month or so ago, and we just finished up a few weeks ago. So these modules that you will all receive will be pre-recorded. We are going to also offer 6 live mastery support sessions the following, each week. And I'll talk about the dates and times of those mastery sessions. But, these 6 modules will be stored in our new VectorVest University. Hopefully you guys watched this last week's special presentation. I took you guys on a tour of the new site, the new university. It eventually will take the place of Digital Chalk. Digital Chalk will still be active for a little while, but all of our new courses will be stored and will be launched within the new Thought Industries VectorVest University. Okay, so in Module 1, again, it's pre-recorded. Dr. David Paul takes you through the anatomy of a swing trade, and it's a really, really important foundation for the entire 6 modules or the entire 6-week series, because he will take you through price and volume structure. Really important to know how price is structured within VectorVest and what long upper tails mean and what long lower wicks mean, and the difference between closing at the lower portion of the body and the psychology behind closing near the highs of the session. All of that is really important, and really, really important is volume. Because especially in modules 4 and 5, when we teach you guys about reversal patterns and continuation patterns, volume breakouts, really important. When you have a reversal pattern or a continuation pattern and price breaks out or breaks down and triggers a trade, it's really important that that breakout or breakdown is accompanied by volume. Okay. David talks about managing risk, and then also really crucial in any trader's arsenal is position sizing, being able to position size, when to add to positions. Okay, he does a great job with this module. Steve Chappell will come in Module 2 and teach you guys about indicators and scans for trending markets. We talk now about the market and how to analyze the market first. Is it trending? Is it moving sideways? Is it channeling? And the reason why we differentiate the two, because not all indicators work well or at all in different types of markets. For example, if you've ever tried to use the MACD or moving average crossovers in a neutral, non-trending market, you know it's very difficult and you don't make much money. It doesn't produce many winning trades. So we're going to teach you how to apply indicators like moving averages and MACD and DPO. Steve does a great job also in teaching you how to draw trend lines and how to adjust trend lines, how to accelerate trend lines, okay? And then he teaches you about the Midas touch as well, okay? Then Dr. Paul will come in and talk about channeling markets, how to recognize a channeling market and which indicators are used for each, for that type of market. He'll teach you about ADX, relative strength index, stochastics, support and resistance. But those two modules, 2 and 3, really important in that we teach you about the market first, how to recognize what the market's doing, and then implementing indicators, applying indicators that are ideally suited for that type of market environment. And then my favorite couple of modules there, Steve's going to come back in module 4 and teach you about reversal patterns, double tops, double bottoms, head and shoulders, inverse head and shoulders. And more importantly than recognizing, okay, I have a head and shoulders pattern. I mean, that's only half the work. The other part is, when do I exit or enter the trade? If it's a head and shoulders pattern, and that head and shoulders pattern is confirmed by a breakdown, stock price moving lower below your breakdown level, and Steve's going to teach you where those breakdown levels are. If you're not long the trade and you want to take the trade short, where do you enter? If you happen to be long the trade, where do you exit? If you take the trade short, where do you cover? Where is your profit objective? Where on the chart? At which price should you think about taking gain off the table? And the same goes for continuation patterns, the same type of teaching for continuation patterns. Triangles, rectangles, flags, pennants. We teach you how to recognize what the patterns look like, a little bit about the psychology behind the pattern. If it's a bullish pattern, where's your breakout level? If price breaks out, is it accompanied by strong volume? Great. If it is, you take the trade. If you do take the trade, where's your exit? Where should you expect price to move to so that you can become defensive and take profits? And then finally, I'll do module 5 and I'll also do module 6. Module 6, we wrap everything together, and I'm going to teach you about how to set up the trade, how to execute the trade, and more importantly, how to manage the trade. So it's almost like a live trading session, that last module number 6. So it's a great course. We got a lot of great feedback. I've gotten emails from subscribers who said this has been their favorite course out of all the courses that we teach. They're traders, they're swing traders. A retirement guy, hopefully is looking to improve their skills, right? If you're a retirement guy and you have no idea about swing trading or have never attempted any type of technical analysis, this isn't as so advanced where you won't understand what we're talking about. Okay, so David and I and Steve really designed this course to make you all better traders. Okay, so let me go through just a few of the patterns that we're going to teach you in this course. Let me open up VectorVest. So Jerry's asking, are these all pre-recorded? The modules are pre-recorded, but the mastery sessions, which I'll talk about here in a little bit, they are not pre-recorded. They will be live. And they'll be kind of in the early afternoons, 2 p.m., and I'll talk about the specific days when those will be held. Okay, so the modules are pre-recorded, but the mastery sessions will be live. Okay, so I'm going to go into viewers, and just for the purposes of this this webinar here, I created a folder called Precision Swing Trading. You don't have this folder in your account. I just created this for myself. And let me talk to you a little bit about bull flags. Okay, I'm going to click on bull flags, and I'm going to graph them. I'm just going to zoom in here. Let me just take this line off. Let me take this line off. Let's talk a little bit about, let me take earnings off for a second. Talk a little bit about what a bull flag is, how to recognize a bull flag. A bull flag is a continuation chart pattern, and it's some of the characteristics of a bull flag is number one, you have a substantial sharp move to the upside, particularly on higher volume. So a strong upward price move. The stock went up 1, 2, 3, 4, 5, 6, 7, about 8 days in a row, 9 days in a row, accompanied by really strong volume. Okay? As you know, it would all be great if stocks did just keep going up, but they don't. Generally speaking, what you're gonna see after a really strong, almost parabolic move like that is a period of consolidation. Sometimes that consolidation can take the shape or the form of a downward sloping channel or a sideways channel. And it's called a bull flag because of the way the pattern is shaped. The flag pole is the substantial increase, the substantial rise in the stock price. The flag is formed during that consolidation period. And all I've done is I drew a couple of lines here connecting the lower part of the channel and connecting the upper part of the channel. Okay? And generally, during that consolidation period, you're going to see lower than average volume. So that's how you recognize a bull flag. It's a continuation pattern. What we're looking for and expecting to see is a continuation in the prevailing trend, in the previous move. And you can see where we get our breakout. Okay? So the breakout occurs when price closes above the lower trend line. The upper trend line. Particularly, we want to make sure that there's volume accompanying that breakout. Richard says, when is the flag invalidated? When the flag descends below a recent high before it took off? Well, no, a flag is invalidated if, so you got a flag pattern here, right? So you're looking at this period of consolidation. There's your lower trend line, there's your upper trend line. If price breaks down below that lower trend line, there your flag is invalidated. As long as price remains in a consolidation period in a rather narrow channel, within a 1 to 3 week time period, you have a chance for a breakout. If the stock breaks down below that lower trend line, you pass, you move on, you stop watching the stock. That didn't happen here. We got a nice breakout on some pretty good volume. Let me be very clear here. A breakout occurs only when the stock price closes above that upper channel line. Okay? You have two choices. You can take the trade. So why wasn't this considered a breakout? Didn't quite close above that upper channel line, did it? It closed basically right at it. That's a breakout. That's a strong breakout. Not only did it open above the channel line, but it closed well above that upper trend line. And you have two options. You can take the trade near the close of that session, or you can wait for the next day. The next day we got follow through, even more volume. You're long the trade now. Okay? You're long the trade. Where do you set your stop loss? Where is your initial stop loss? With a bull flag pattern, the initial stop loss is the low of the consolidation period here. Okay? Wherever that price is, the low of the consolidation period, but a buck 30 and change. Okay? We also talk about what's called the measured move. The measured move is where you should expect price to run to after the breakout. And with a bull flag, the measured move is the length of the flagpole. The length of the flagpole. So in this case, we're looking at about 126 to about 139. So a 13-point move is where we should expect price to move to, above the breakout level of 136. So 149 is where our initial profit target should be. I'm going to go through that again. The length of the flagpole is your measured move. The price between the price distance from the bottom of the flagpole to the top of the flagpole is how far you should expect price to move to. So we're looking at 126 to 139. That's a 13-point move. 13 points or $13 from the closing breakout of 136 is 149. Where did price move to? 149. Before it took a little bit of a breather, didn't it? Continued to move up, but it reached our profit target of 149. So we're going to start thinking about taking gains off the table. You have some options. You could take the whole thing off, move on to another trade. You can take half off, take your gain off, let the rest run. Okay? And you could see you could have squeezed out a few more bucks there if you would have done that. Okay, let me go to the next one. Oops. I'll get there. There we go. Okay, let me zoom in here. Okay, so here's Bristol Myers back in November of 2019. And here we have a bull flag. Now, with the previous stock, the flag took the shape of a down-sloping channel. A bull flag could also take the shape, or the flag can take the shape of a horizontal channel, okay, or a horizontal rectangle. So here is your substantial move higher. We got 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row the stock goes up. It goes up on pretty good volume. You get a period of consolidation here. I said that consolidation period could last anywhere between 1 and 3 weeks. And we're looking at about that time period, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, about 3 weeks here of that, of a consolidation period. During that consolidation period, volume starts to dry up a little bit. It starts to increase a little bit towards the end, but we don't have a breakout yet. Where's our breakout level here? Since this is a horizontal channel, the breakout is going to be above the upper channel line. We don't have it yet. There we go. There's your breakout. Good volume. Open below the upper channel line, but winded up closing above it, closing at $65.45. So you have two options. You can take the trade right near the close of the session when you see price about to close above that upper channel line, or you take the trade the next day as price moved higher, didn't close higher, but it moved higher the following day, resulting in you taking that trade. Where's your initial stop loss? Well, with a horizontal channel, it's going to be right below the lower channel line. That is your initial stop loss. Right below the low of the consolidation period, right? Right below support. That's where your initial stop loss is going to be. Where should we expect price to move to? Well, it's going to be the length of the flagpole. So here we're looking at 60, let's call that 64 bucks, $57, that's $7. So we should expect price to quite possibly rise $7 more from our $65 closing breakout level. So about 72 bucks. Got the 67. Hit a high of $68. Didn't quite get to 72, but so what David is going to talk about in module 1 are candlesticks like that last candlestick that you see there at the top. It's green, but it's filled. It's filled because the close was lower than the open, and the close was near the low of the session. That's not necessarily all that bullish. It's green because it closed higher than the previous day's close, but the close off of that far off of the high near the low of the session, followed by weakness the next day, is a good opportunity to take your gain off the table. And that would have been a pretty decent gain there. Okay, that would have been a pretty decent gain. All right. So that's a little bit about bull flags. We have basically a whole module on bull flags and triangles and rectangles and head and shoulders. Let me talk to you about triangles. Okay, just another little taste of what we're going to teach you in this course. So I just clicked on my triangles watch list. Again, you don't have this watch list, but let me show you what I'm talking about. Okay, so here we have TMO. Okay, triangle is a continuation pattern. Can be a continuation pattern. Can also be a reversal pattern as well. So there's three different types of triangles. There's a symmetrical triangle, similar to the one that we're looking at here. There's also ascending triangles and descending triangles. Both, oddly enough, can be either reversal patterns or continuation patterns. Just depends on where the stock breaks out or down after the pattern or after the triangle comes to fruition. So here we have a symmetrical triangle. And the reason why it's a symmetrical triangle is because we have lower highs, but we have higher lows. Okay? Basic geometry, right? It's a symmetrical triangle. Lower highs, higher lows. What's happening is price is getting squeezed closer and closer to the apex of the triangle. Something has got to give. Okay? Since we've been in an uptrend, what we hope to happen is price to break out above the upper trend line. And we want it to do so on higher volume. And we can see that it did that on June 6th of 2019. It closed above, let me zoom in so we can see it a little bit better. Closed above the upper trend line, and it broke out above on higher volume. So again, the two options that you have are to take the trade near the close of that session or wait to the following session. Following session, we get follow through, stronger volume there as well. There's your breakout. You take the trade. Where's your stop loss? Your stop loss is the low of the last reversal. So essentially, the last reversal off of, let me pull that down, off of the lower trend line. The last reversal off of the lower trend line. Essentially right there. So if I just show you here, let me zoom in a little bit closer so you can see it better. If I take this line away, there is the last reversal. Oops, what did I do? Got to get that line back. There it is. There's where I'm setting my stop. Right below the low of the last reversal. If I just pull this down, there it is. One bunch of touches, right on that trend line. One touch, two touches, three touches, four touches. It's basically you got another touch there, but it's higher than that reversal. So that's where I'd set my stop. My profit objective, excuse me, is the width of the triangle from the first lower high to the first higher low. So I just kind of draw a line there. There's that peak. There's that low. That's how far I should expect price to move to off of my breakout. Now if I just create a horizontal line here, we're looking at 278 and 258, so $20. $20, 258 to 278, 20 bucks. That's how far I should expect price to move from my breakout level. My breakout closing price was 274. So 294 is where I should set my initial profit target. Give or take a few bucks. It's not always going to be exact, right? When I say 294, we got there. We got there. There's 294 right in this area here. We got there. I wouldn't have blamed you if you would have maybe taken some off right in this area. Here's another consolidation period. Could almost be a bull flag as well, right? Really strong up move on higher volume. Little about a week consolidation period, a week's worth of consolidation, not weak as in not strong, but a week in time of consolidation. You can see how volume dried up during that period as well. So you get a little bull flag here as well. So not only do you have a breakout above the bull flag, which is, again, a continuation pattern. So you could have taken some profit off, let the rest run, reached your profit target, you take the rest off, and you got a really nice trade there. Okay? And the last one we'll look at right here is AWK. Now this is an ascending triangle. An ascending triangle. It's an ascending triangle because you have a level of resistance here, right? You have a level at which sellers are pushing the price lower. They're resisting it from rising any further. However, you have higher lows, don't you? You don't have support. That would be kind of a triangle. I'm sorry, a rectangle, or support and resistance. You actually have higher lows. So it's an ascending triangle. And what we look for is a breakout to the upside. We look for a breakout above resistance. And there it is. There's your breakout above resistance on some pretty good volume there. Okay? So you take your trade. Where do you set your initial stop? Well, with an ascending triangle, it's the low of the last reversal off of that lower trend line. Where's your measured move? It's basically the fatness or the width of the triangle. And I don't go all the way back here. I'm not going to look at that the first low there. Okay? I'll be a little bit more conservative, and I'm going to take it from the second higher low to the top of resistance. So I would say, okay, how far is that? That's about $1.23 to $1.17. That's $6. $6. So $6 higher than my breakout closing price of 123 and change. So I should expect it to go about to 130. We get there. Okay, there's your breakout. Look at that volume that accompanied that breakout. And the stock just kept screaming higher. So 130 could be, is your initial target. I see no weakness here up until about 136 and change or so, right? If 130, look, the stock closed at 130.44, which is exactly where your initial profit target should be. We're right at 130. I see no weakness over the next couple of days. So if you wanted to take half off, you could have, but you're going to let the rest run. Because again, you just see no weakness in sight. Okay, we got another one. We got another triangle here. Let's fast forward. Now this is a descending triangle. It's a descending triangle. Here you have a level of support with lower highs. A level of support with lower highs. Generally speaking, during the duration of that triangle, it's accompanied by lower volume. Generally speaking, you get your initial, your occasional spikes from time to time, but generally you're going to get some lower volume. There you get your breakout above that lower trend line. That upper trend line. Good volume. You take the trade long. Where's my initial stop? I don't have to draw it because I already drew it. It's right at support. Right at support. My measured move is going to be kind of right in this area here. From the second lower high to support, which is about 132 to 112. That's a 20-point move. So I should expect price to move 20 points higher than the closing breakout of 123, so 143. Do we get there? Well, see, now here's this is actually the hard right edge, guys. This is the current time. So we didn't quite get there. We didn't quite get there. You know, you take gains off the table somewhere in this area, that's fine. If you want to let the rest run because your stop loss isn't triggered yet, you could. What did I say, 143, right? What did I say, 143? I said 20 points. Yeah, 143. We got as high as 134. We got about halfway there. 50% of your potential 100%. Okay? Stock price is breaking down a little bit. It's kind of forming a new resistance level, right? Where did it stop going up just previously? Stopped going up at the last high. So what you're going to learn also is how to manage trades using support and resistance. Okay, so I see this was a descending triangle, right? But we got our breakout. So I said that 143 is our profit target. You see price reach the same level that it reached back here in April and then retrace from it. That's bearish. So we're kind of taking money management tactics from another indicator like support and resistance and helping us manage a breakout trade out of a descending triangle. No, we didn't get to 143. That was the hope. It's not always going to be that way. But we see weakness at resistance with a retracement from resistance. You're going to learn that that's, again, bearish, and you should start thinking about taking gains off your table at that point. Okay? All right, guys, so that's just a little bit, just a little taste of what we're going to teach you over this 6-module series. Okay? I do want to thank Ray. Ray Clark is in the background. He's answering questions. I really appreciate it, Ray. And I'm going to get to some of the more common questions. If you guys want to stick around for a little longer here, I'm going to answer some questions. But let me talk more about what you're going to get for this during this course. All right, here's a special bonus. You're a VectorVest subscriber. You don't have our VectorVest real-time program. Let's say you have our end-of-day program or you have our intraday program. We're going to give you 60 days access to VectorVest real-time. You already have real-time, you already have real-time. Well, we don't tack on any more time to your current subscription. But if you don't already have VectorVest real-time, we're going to give you 60 days access to it. The regular price for this course is $995, but we're extending our Father's Day special a little while longer, and for a limited time, we're offering this course for $495, basically half off the regular price. And what Ray did is in the chat box, he typed in that address that you see at the bottom, www.vectorvest.com/PST. You can click on the link in the chat box or just go to that site. It's going to bring you to our brand new VectorVest University, via Thought Industries. It's going to bring you to the catalog page or the detail page. You just simply click on Purchase Now, Purchase Course Now, and follow the instructions. Very straightforward from that point. Okay. The live mastery sessions. So one of the great things about the new Thought Industries University platform is when you sign up for this course, you are immediately going to have access to all 6 pre-recorded modules right away. What we used to do in Digital Chalk, right, is we would release one a week. You don't have to wait anymore. It's basically like Netflix, right? It's on demand. You can binge watch all 6 modules tonight if you wanted to, once you register. What we're going to do is starting July 7th, that's a Tuesday at 2 p.m., we're going to do a live mastery session devoted to the contents of Module 1. The following week on the 14th, we're going to do a live mastery session devoted to the contents of Module 2, and so on, and that's going to last for 6 weeks, beginning July 7th. And all of those mastery sessions will be at 2 p.m. Eastern Time. Okay? One of the best things about this course is not only the instructors. David, Paul, Steve does a great job, but some of these modules, guys, you might be asking, well, how long are the modules? Some of them are 2.5 hours long. So you're getting your money's worth. It's not going to be a quick 50-minute to an hour module. Some of these modules are an hour and a half, 2 hours, 2.5 hours long. There's a ton of content. There's great instruction by David, Steve, and myself. So for sure, you're getting your money's worth. And I realized that as the modules were kind of being delivered live, I'm like, boy, these folks are getting a ton of great information, during this course. Okay, Babette is asking, do you teach us what patterns to look for drawing the lines on the chart? Yes. So we teach you the patterns. So we're going to reverse that statement or question, Babette. We teach you the pattern, then we show you how to draw the lines on the chart. Okay. Ed is asking what the elite member price is. It's the same price. So the elite member price is always half off the regular price. So the regular price is $995. Slash that basically in half, and it's $495. So the elite rate is $495. The special Father's Day rate is $495, but that rate is for a limited time only. Okay. Okay, Gil says, great course. Gil took the course. He said, help me with my swing trading and pattern recognition. He says, take advantage of the course, well worth it. Thank you, Gil. Yeah, and that's one of the things too, guys, is the reversal patterns and the continuation patterns. Unfortunately, but unfortunately, we don't have scans that find the patterns. You're going to have to go into the chart. And I think chart reading just makes you better traders. And like Gil said, he said, helped with my swing trading and pattern recognition, going into charts and seeing what price is doing in real time, right, as of the hard right edge. Am I hitting lower highs? Am I also hitting higher lows? Well, what is that? That's a triangle, right? Is price consolidating after a substantial move? Well, if it is, and you learn to recognize that historically, and we're going to show you a lot of historical examples, you're going to become better at recognizing those in real time. Okay? Stephen is asking, how do we know what chart to look for? It's not that you're going to look for a particular pattern. You're going to look for whatever pattern is there, right? So if I go into a stock right now, I'm going to look at what price is doing right now. Is it forming a bull flag? Is it forming a triangle? Is it forming a rectangle? Is it an inverse head and shoulders? Is it a head and shoulders? So you're going to learn all of these formations so that in real time, you're able to pick out which one a particular stock is exhibiting. So it's not like, I'm going to look at 100 charts and I'm only going to look for bull flags. No, you're going to look for whatever pattern is exhibiting at that point. Hopefully that makes sense. Gary says, how long is swing trade that you teach? Well, the holding, I think, Gary, you might be talking about the holding period, right? How long generally do I hold on to a stock? Well, it depends on the pattern. With a bull flag, I told you what the measured move is, right? Well, I didn't say it's 2 weeks. I said it's price. It's a dollar amount. How much in price should you expect it to move before you start thinking about exiting the trade? So it's not necessarily a holding period. It's more of a dollar price point, dollar amount. Okay. All right. Arash is asking, can we use swing trading techniques for day trading? For example, 15-minute time frames. Yes. All of the patterns that we teach you are applicable on any time frame. Intraday, daily, which we are going to teach you. We are only going to be in daily price bars and on a daily chart, but it can be used weekly or on an intraday basis as well. Babette is asking, can you apply what we learned to end of day subscription? Australia doesn't cater to real time at this stage. The answer is yes. Simple answer is absolutely. Gil is also making a comment. Helps me see which way my positions are going to move, lessens my risk. Absolutely. Stephen says, what do we do to start looking at charts? I'm not sure I understand what you mean, Stephen. We're going to go through all that. It's going to be a very thorough instruction. Any questions you guys have right now as far as implementation, practical application of any of this stuff, it's all going to be covered in the course. Which indicators to use, kind of what time frame to look at, all of that stuff is covered in the course. Gary's asking, when will the software be available real time? As soon as you order. All right, as soon as you order. All right. For how long? 60 days. 60 days. So 60 days from today is August 24th. When is our last live mastery support session? August 11th. So you have at least 60 days. You have 60 days of the software starting from now. And that'll cover the entire duration of the course. But remember, if you order right now, or whenever you order, you'll have all 6 modules. Oh, by the way, right now in the new university, once you go into the course, you'll not only have all 6 modules, but you'll have all of the live mastery support sessions that we did previously. Now, again, they're not live now. They were live when we delivered them, a month or so ago. But they're still stored in the new university. As we deliver the new live mastery sessions, the old ones will be replaced. So right now, you will see Module 1. You'll see Module 1's mastery session from a couple of months ago. You'll see Module 2. You'll see Module 2's mastery session from a couple months ago. After July 7th, after we do our first live mastery session for Module 1, the old mastery session for Module 1 will be replaced with the new one, and so on and so forth. And that's what's going to happen in general when we deliver new content. All of the older content within the new university will be replaced with the newer. Okay, so all of the older content in the new university will be replaced as we deliver new content, and that goes for all of our courses. Gary's asking, can you show the dashboard? What modules are there? Sure, I can just kind of go back here. There are the modules. I don't have to go into Thought Industries or the university. I can just show you right here. Here are the modules. Here are the titles. Kind of here are some and the content pieces within each module. All right. Let me go forward. Oh, by the way, guys, this is being recorded. Whoops. So within about an hour from now, you're going to get a copy of this recording, copy of this webinar. You can go back, at any time and kind of review it if you'd like. All right, guys, if there aren't any other questions, let's see. Jerry says, how long do we have access to the course? 1 year. Good question, Jerry. Thank you for that. 1 year, same as Digital Chalk. 1 year. And it's 1 year from when you order. And the reason for that is you have all of the modules right away. It's not like you have to wait 6 weeks for the 6th module. So as soon as you order, your clock starts from 1 year. You immediately have access to all the material, all of the resources, supplemental material, all of the modules, everything. All right, Babette, welcome. Babette says, I'm in. Gary says, maybe Facebook. Let me go up. What do you mean by maybe Facebook, Gary? Jerry says, ordering now. Awesome, Jerry. Welcome. Steven's asking, why just 1 year? Why just 1 year? Not sure how to answer that, Stephen. That's kind of just a generic time frame that we put on all our courses for 1 year. Gary says, what about email support? Each of the instructors, Steve, David, and myself, basically it's 6 modules. We did 2 modules each. We give you guys our email addresses. So let's say you have a question about module 2. Well, Steve did module 2. Steve's going to give you his email address, so you'll email him directly with any questions you have regarding module 2. And I did modules 5 and 6. I'm going to give you my email address, and you email any one of us regarding any of the content within the module that we taught. Okay. All right, Claude says ordering now. Awesome, Claude. Let's see. All right, guys. Well, I'm going to go ahead and close for today. I want to thank you guys for joining us. If you have any questions, give our support department a call. Remember, this $4.95 rate is only available for a short period of time. Steve and I and David, we love teaching this course. We really look forward to working with you guys. And we'll see everybody again soon. Take care, folks.